Hello and welcome to TLJT Talks. Today we are hosting Ms. Sharwari Pandit. She has been our guest in the first season as well. So we are glad to have you back again, ma'am. She's a graduate from NLSIU and an MBA graduate from Cornell University. She has deep interest in law and technology. And today she'll be talking to us about central bank digital currencies. So, ma'am, as we start, could you just start with defining what CBDC actually is? Because it's something that is in news these days, and people are hearing a lot about it. So, if you could just start with describing.
Yeah. No, so first, thank you so much for having me. I absolutely had the pleasure of being here in your first season, and I enjoyed having that conversation a lot as well. And excited to be back and talk to you about central bank digital currencies. Just for ease of conversation, we're going to refer to them as CBDCs for the rest of our conversation today. And you're right, it is very new. It's a novel concept and it's quite exciting. It's been creating a lot of waves, especially in the regulatory and tech space. And as a concept, it's quite simply saying that a country's currency, so the US, for example, has the US dollar, and India has the Indian rupee. So a nation's currency, which is normally kind of managed through cash and other means, can now be digitized. So we've always had digital money as a concept for a while now. So we've been making payments digitally and things like that. But what distinguishes this is that this is your country's currency, which means it is backed by the central bank. The central bank is the authority which guarantees that money. And the implications of what you can do with the central bank digital currency are a lot more than simply exchanging funds or transfer of payments, but essentially now start using a much faster real-time tool to use in your development and monetary policy. And that's a big change.
Right, but how is it different from the rupee that we are already having? Because I have been going through that document and it says that it is going to be e-rupee. So, if you
Yes.
could explain that difference.
No, absolutely. So, and it is a little tricky, right? Because essentially, it's very simple for me to explain to you the difference between a physical note and any other form of payment. But what I'm doing now is I'm in an environment where digital payments already exist. So you already have a, Paytm account or a PhonePe account or anyone else, and you already have cash that you're putting in it. How is a CBDC sort of different? And well, the fact is that it really is going to depend a little bit on how every country imagines it. Conceptually, the difference is that what you're doing when you make a payment to your chaiwala using your Paytm or any other application, you're transferring funds that you put from your, say, bank account, etc., into the wallet and then into their wallet. And so there's a legal difference between that and you being able to get, for example, your subsidy from the government on your phone directly as cash Indian rupee. It's just not something you're holding in your hand. And that is a distinction that's confusing the brightest of minds. So it's not something that is very obvious and simple to understand, but you should definitely think of it more as the value of you having a physical banknote, which is guaranteed by the government of India, is now being put on blockchain or any other kind of, depending on the country's choice, any other platform as a representative digitally. And it means that you can make, it obviously has impacts on retail, but for a country like India, which has such a robust digital payment ecosystem, that impact is not very new to us. It will also have impact on interbank transfers, cross-border payments, and things like that, where you'll really start to see the differences in Indian, because you could now possibly go abroad and transfer your payments, use your currency, real-time exchange it possibly, without having to go through the circuits that you currently go through. And on an even higher level, if you think about it, what this means is that when governments make payments, so when the central bank releases some amount of cash into the banking system with its partner banks, or when you have interbank transfers, when payments happening, which is currently a loop that takes a few days to some hours at the best, at the earliest. And that can now happen almost real time. So if you're a regulator and you really want to change interest rates, things like that, the impact of that is normally seen within a few weeks or a few months, even sometimes. Now you'll be able to see that within a few days because you will be able to give that effect very quickly. So
Right.
there are many layers to how having a digitized currency will be very different, because now your digital currency reserves, for example, will be declared to the world. And so you'll see that with China, which has started on its currency reserve declarations, actually declaring the amount of currency they hold in reserve digitally, and then, in cash and other forms. So that those are the kind of places in which you're kind of essentially, for the first time, really changing the nature of money itself.
Right. So is this the reason behind so many regulators and central banks around the world thinking about introducing CBDC, or do you want to add something to it?
No, you're absolutely right. This is one of the reasons why regulators are at this point in time. In fact, you'll see that more than 150 countries are at some stage of exploring or piloting a CBDC. And different countries have different reasons for it. So, for example, when you're looking at a lot of emerging markets, the trend you're seeing is that regulators in emerging markets have been faster almost to explore and embrace these concepts than ones in developed economies. And the reason is because you essentially can bring a vast amount of financial inclusion. So you need to understand that when you look at India, you already have, as I mentioned, a robust digital payment system. But in many other countries, for example, in Nigeria, the e-naira was, the big kind of disruption, which led to people making these payments over digital formats, extending them to rural areas and things like that. So in a lot of emerging markets, the aim is, we want to bring in more financial inclusion. We want people to kind of access finance more. So a lot of the places where you have large unbanked populations. And I mean, that will be something that even in India, it's going to be useful, right? Because again, you can have a Paytm account when you have a bank account. But if you don't have a bank account, that's where you see, e-rupee starting to be a much more powerful sort of tool for the government to start helping a lot of citizens. So that was one big one. And I think that the other really big one, which, is globally, is you need to understand why this has caught the imagination of so many regulators now. So this is, as a concept, has been discussed theoretically since the 1990s, but it's really sort of seen its sunshine today because you operate as a regulator in the background of the rise of cryptocurrency and a large amount of alternative finance. So for the first time, you're, as a government, not able to control the flow of money over and around your borders, because cryptocurrency has completely changed the way we imagine currency. And so if you're a government right now, you're not able to track, you're not able to engage with it as much, and you're really not able to provide an alternative to anyone else either. And the question of whether it can be a legitimate alternative to those who invest in cryptocurrency is a far more complex one. But at least from a government side, you want to provide that option. And more seriously, you want to be able to track money better now. So in terms of governments that are worried, especially our government, worried about black money, or just money laundering, these can be very powerful tools to start being able to track your money, and kind of see where wrongful actors are kind of taking it, because then you can track it, and you can have that crackdown possibly.
Right. So since you spoke about how cryptocurrency is so unregulated and how government wants to keep a track of everything, so I want to ask you how is RBI approaching implementing CBDC? How is it, providing a framework for CBDC to actually perform to the best of the values that are behind introducing it?
No, absolutely. So the RBI has come out with a concept note, and it kind of moved very quickly, to be honest, with the RBI. I mean, I'm sure internally they have been working on it for a longer time, but in terms of the concept note coming out, later in 2022, and then them starting a lot of pilots and things like that, you really did see very fast movement from the RBI. And when they came in, the RBI has kind of in its concept note been very detailed in terms of providing the reasons, which I mentioned before, and most of them apply to India. And then also, the really kind of nuts and bolts of how they want to go about this. So, for example, you have a choice that different countries make in terms of whether they would want to include blockchain and distributed ledger technology while managing or introducing a CBDC, or whether they would not. And India has been clear that it will look at using or leveraging distributed ledger technology. So that's a big kind of technical design decision that they've come out with. The second is, as I mentioned, different countries are looking at using this differently, which means that a lot of them might think, do we make this a retail currency? Do we make this, for the lack of a better word, a wholesale currency, in that it stays between the regulator and the banks, the major national banks? So in that, India has come out and said we want to do a hybrid approach where we want to introduce it in retail, and we want to introduce it in wholesale. In retail, the discussion that we had earlier is a pertinent one, in that how much organic adoption will you really see for the e-rupee when it is extremely simple for you to already use a bunch of other platforms. And the reason I say that is because you've seen that happen in China, where they've introduced, and they're seeing that there's a lack of organic adoption. So they really have to push very hard. They've, for example, Alipay, etc., have been pulled in to partnerships with the government, and to offer a lot of E1 and things like that. They've literally distributed 30 million, is my understanding, to people for free during various festivals and things like that, to kickstart adoption. And still you don't really see that uptake, because here's a population that already has tools to use. That said, definitely for larger transactions, for more secure transactions, right? Let's think about it in terms of you paying for a house. These are places where you would want to then fall back and say, look, I'm going to trust, a state-backed product, the e-rupee, and I feel confident in making that transaction. I can easily show it on my tax papers, things like that. So if you're somebody who really wants to comply and you're normal upstanding citizen, these are places where you're going to lean into your e-money. So it's interesting that there are lots of places where it can really be disruptive. But in India, I think organic adoption in a very retail sense might be a little harder. On a interbank level, that is the wholesale, for the lack of a better word, level, it can be game changing, and we know that the RBI is currently in pilots. They're a little closed in that we don't really know exactly what they're testing and things like that, but they're already in pilots with several banks. At the SBI, SBI has definitely been in a pilot with them, because that was something one of their officers spoke about at the Columbia India Business Conference. So we know that there's a lot of work that's happening, and probably a slightly more larger and public pilot is going to come around sometime soon. I think the bigger thing that the concept note definitely also touches on is how are they going to really approach maintaining the anonymity and privacy of the individual as you do with a cash equivalent. And if you study the theory of money, most people will tell you that the inherent characteristic of currency is that it is interchangeable, is that it is, in a sense, anonymous, and not from any illegal point of view, but just in the sense that the 10 rupee note that you are holding does not have a trace of who held it before. And that lets it be interoperable and interchangeable in a way that's very fundamental to money. And when you say you want to change that and you want to make it easier for you to track, for you to follow, any streams of payment that are illegal, but you also want to maintain privacy and kind of respect the inherent nature of a currency, that becomes an interesting question. And so but the very encouraging thing is that the RBI comes out very clearly and says that no, we are trying to create solutions that are in line with the privacy laws and the spirit of what a currency should be. And so but the exact solution that comes out is going to be interesting to see, because this, in my opinion, has been the hardest problem to crack, not just for India, but for economies, especially democracies around the world, because you can still have countries and which kind of can take a quieter view on letting go of privacy of the individual in favor of tracing all of these things, but countries like India, most of the other countries that are very sort of, in that sense, vibrant democracies, they're going to really have to balance these two things. It's going to be very interesting to see how they do that.
Before we move to the next question, just one question on a very, very light note.
Yeah, of course.
Don't you think privacy is a myth? Like, does it actually exist?
I think that it's a fast eroding right. I agree. I think that it's also interesting that we always get really worried about privacy, and we should always be worried about it because of the tools and the new technology that's kind of coming in. But privacy has been something that people have been concerned with since at least 200 years, because you have Justices Warren and Brandeis writing about, there are these PAPs and they're looking into our houses. And so at every point in time when the technology to find more information about you has existed, people have then reacted with saying, no, but we need to strike that balance. It's just that at the time that we're living in right now, that technology is accelerating so fast that it's really hard for governments and states, or even just as consumers, for us to make those decisions and to kind of find that balance. So I think that in that sense, I said that it's fast eroding because the technology is growing really fast, and the models that have been set up sort of are not really the best for taking care of your privacy. So we're kind of, I feel like it's more like a losing battle. I don't think it's a myth, but I do think that it's a losing battle at this point. And it's something that's quite uphill for even for companies that want to actually make sure that you have the privacy and that you deserve and that your government affords you. But I just think that all the models that we are currently pulled into are the ones that kind of put privacy on a back burner. And so in that sense, maybe it's a myth.
So I made this one analogy while writing a research paper. So just imagine that there's a pipeline that is connected to you and it's taking all the information from you. So now it's getting deposited to one repository. So are all the repositories interconnected, or there's one single repository, or the pipes are interconnected, or there's one single pipeline? Because you just search somewhere and you get the results everywhere. So this is something we'll talk about in some other podcast episode. Let's get that topic. Yeah.
I completely agree with you, but it's a very good analogy. It's probably very close to kind of how data and big data rather is being used right now.
Right. We will definitely host you on that topic also sometime.
Yeah, my pleasure.
Yeah. So you spoke about several pre-existing applications that are there, like Paytm, GPay, or and many others. So how do you believe that a medium ground will be achieved between these payment apps that are pre-existing and this new CBDC that has come into picture? Also, let's keep that in mind that Indian society is built in that way that it does not accept something very easily. So how do you think a middle ground could be achieved?
So I think that I don't think that this is an instance of existing players having one more competitor, to be honest. It can look that way because, like in China, as I mentioned, the e-yuan really, it struggled with organic adoption in some sense. But I don't think that Paytm, etc., are going to be um, competing in the same way, because it's almost as if, think about it this way. You buy a bunch of products, like let's say you buy milk from different, providers, but the government sets up a dairy. Is it really going to change the industry for you in that way? No, not really. But yeah, you do have a competitor on the scene. If anything, I think it is the e-rupee that will be, and again, this is only retail. So we kind of focus on CBDCs only in retail because we tend to only interact with money that way as a consumer. But CBDCs are larger than that. So I think for more than 50% of their, use, Paytms, etc., don't really have any direct sort of competition or disruption, right? And then when you're looking at the retail part of it, I think that in fact people are already using so many of these other products that the e-rupee will have to offer something in terms of usage very valuable or different or more convenient, a differentiator of any sort, basically, for people to really desert any existing payment providers, right? The way a government might do it, for example, is say, well, if you want to pay a certain bill for your electricity, which is, say, given by a government provider, even that nowadays isn't, but let's say, then they might insist that you pay through, the e-rupee. But you can't really force consumers the other way. On your point about people being not very open to or not being early adapters, I don't think in this industry it's relevant anyway, because we have already had a digital payments upskilling, and then COVID and things like that, people have had to learn. But I would also just on another podcast contest the claim that Indian consumers are not very good adapters of change. I don't think that's true.
Yeah, we'll have something on social dynamics.
Sure.
Right. So I think you answered this question in a way or other, but is the Indian banking sector really ready for this change?
Um, Ready, I don't think there's a problem of being ready or not, to be honest, because we do have a very robust digital payments ecosystem. We do have digitization as an agenda for the country, and even then for the banking system. We have a progressive understanding of finance and technology, because let's be honest, we're the home of UPI, right? So there's a lot of movement that's happened in this industry, and a lot of movement from India really happening in this industry. So I don't think it's a question of whether we are ready or not. I think the fact is that if this really comes in and gets picked up, especially on a cross-border payments perspective, on the way you have interbank transfers happening, so that part of the industry, which is a little quieter maybe, or maybe one step removed from the end consumer, that is going to be disrupted massively. Or for example, if the RBI directly starts offering you retail currency, it might even make some parts of banking redundant. So I think those are the ways in which banks might be, depending on how this plays out, slightly or majorly disrupted. But they are going to be disrupted if it comes out, because it's not, you're not just looking at the country in a vacuum. What you're seeing is CBDCs are being kind of researched and piloted very extensively across the world. They're currently not in action, so to speak. But if generally they start being in action, then the way the global financial order works and engages with each other is going to change a lot. And that will also filter down into our banking industry. So like it or not, we're going to be a little disrupted if this takes off, is my position.
Right. So to add to that, how do you think that taxes and everything else will be charged? What, and if I could just add everything to this question only, what is the current legal standing around the world regarding this digital currency, and what do you think will be the privacy and security challenges apart from what we talked about in terms of something called banking fraud that's very common, you know? So how will these challenges how be tackled, and what new challenges can actually come up?
Okay, so you have lots of questions in that one question. So okay, I think
Sorry
that
about that.
no, don't worry about it. So okay, so I think that there is no one correct legal stance, to be honest, and this is a lawyer's favorite answer, right? It depends, but it really does depend, because and again, this is what I alluded to earlier when I said, the nature of currency is changing, because for a very long time we have all, while we've had different currencies, understood currency with its inherent properties to be the same. So what a US dollar means in America or around the world as you change it, is inherently what an Indian rupee means in India. But with CBDCs, what happens is that it's not just that you're digitizing something, but every government gets to shape characteristics of their currency. To give you an example, China has started creating programmable currency, right? So for example, they can now provide farm subsidies to a farmer using, e-yuan, but that e-yuan is so programmed that it can only be used for farming expenses. You can never give someone 100 rupee note with a programming in it that it can only be used to buy, seeds. But you can do that with the digital currency. So now China has started imagining, and that's called programmable currency, right? China has started imagining it this way. And I'm just using China as an example because they're fairly advanced in their exploration of a CBDC and in their launch indeed. But every country is now going to start thinking about how they can design and engage with currency in a different way. And I think that's what's going to be very disruptive. And so there genuinely isn't a correct way. But it does lead into your second question in terms of how will it impact our privacy as you try to track money and things like that. I think enormously, because you risk, I don't know, you can't say will, but you risk losing the ability to have any transaction unseen. So the same thing that happened with us in terms of any activity online is now essentially a public activity in most sectors. You're going to start seeing closer and closer scrutiny of how you spend. And it already happened with digitization, because now when you pay for tea, someone can collect data on it. Earlier, when you stepped out with a 100 rupee note, no one could collect data on your spends of that 100 rupee note, at least not directly. So I think that, taken to its logical extreme, can be quite it can be very powerful in many good ways, because as the government I can sit and track and say, oh, this is a distressed population, what is their spend, like my data can become very accurate, but how I use it is then a double-edged sword, and that is with data being collected everywhere. So those challenges are very easy to kind of just transfer here, those challenges and opportunities, if you could think of it that way.
Right, absolutely right. Actually, I could think of the topic for our next podcast also. I'll discuss it with you after this podcast on a call. But yeah, thank you so much. That was a very informative session with you, and I again thank you. Also, thanks are due to my banking law professor, Dr. Neha Kapoor, who actually helped me make this whole questionnaire because only she knows how good I am with finances and banking. So I just want to thank her for helping me out here, and thank you so much, ma'am.
Yeah, you're very welcome. And it's absolutely my pleasure to be here.
Thank you.